Now, for more on China's securities market and the new tech board, I'm joined by William Ma. He's the Chief Investment Officer at Noah Holdings in Hong Kong. So, William, give us an idea. What's the significance of creating this new science and tech board right now?
Yes, I think, as a fund manager, we are very excited about this new board, and we believe it would benefit to, different, stakeholder and the companies. For example, to the company, actually, it help improve their capital structure. If they can issue equities, if they can issue bonds going forward, it would be good for them to get new funding source, to develop, their new business. And to the market, I think it's equally important as well, because historically in the China market is focusing on the resources sectors and then the banks. With this new type of new economy companies joining the market, I think that would improve the sectors or the underlying companies that the investor can buy. Last but not least, as a fund manager and asset allocator, I think some of the good high quality technology companies stated private before, the only way for a balanced portfolio allocation is invest through private equity. But now with this company listed on the secondary market, it would improve the asset allocation with better liquidity as well.
Now, it's still early days, obviously. This is something new that's being rolled out. But as more details were revealed about the new Science and Tech Board, what were the biggest takeaways for you?
I think the biggest takeaway for me is the market reform and openness of the Chinese market, capital market system, if you like. If you are seeing, the registration rule and then the brokerage and then the encouragement of global allocators investing in the China market, all these, from my perspective, pointed towards a more healthy, more liquid and transparent China equity market. To me, the key successful of the new board is actually attracting global allo long-term investor into the market and create what necessary needed for any efficient market, which is price discovery. So I think those type of long-term investor coming to the China market attracted by this type of growth companies essential. Last but not least, if you look at the northbound flow year to date is about $15 billion, which is a huge flow compared to $15.7 billion. That indicate a lot of global allocators are already interested in the China-Asia market.
Now, the new China Securities Regulatory Commission chief greeted the media for the first time Wednesday to share these details. How do you see these policy changes impacting existing markets?
I think that create a direction, if you like, that the Chinese government is opening and more kind of open-minded in terms of reform. And the impact to the existing market, of course, some of the liquidity will be drawn by the regional, market to the China market. And secondly, that would also impact on the Hong Kong Stock Exchange as well, because as a global allocators, they have one more choices to participate the Chinese growth company. They can invest in the Hong Kong Stock Exchange listed Chinese company, or they can through QFII or Hong Kong Shanghai Connect to invest those companies listed in the new exchange board.
Now, the registration-based IPO system, it's intended to be more inclusive, not just in terms of the companies that can list, but also in terms of transparency. Tell us more about that.
I think corporate governance and transparency is vital and essential for the future development of the Chinese market. One of the key concerns, if you like, before that is actually information and transparency varies, across different companies. But the key, if you like, is to attract global brokerage, investment banks, as well as investors participating in the market. And through better corporate governance, the board, they will require the company to disclose more information. All this point towards a global standard, and this is very healthy for the equity market. So again, as a fund manager, I think it's a positive development, and we need different participants to come and then, to contribute to the development.
And speaking of standards, how can listed companies and investors' rights be better protected and regulated with this new IPO system?
I think, just like the US SEC, the Chinese government is trying to create standard and require disclosure, if you like, So through more, restricted disclosure, the company has to be more transparent. And as an investor, I think that would reduce the information asymmetry for some of the largest investor and retail investor. That is actually eventually will protect the retail investor. Last but not least, a full transparency system means, global standard service provider. For example, the auditor, the underwriter, the brokerage, the investor, all those people will be impacting, the disclosure quality of those listed company. And this is essential, for this board to be successful.
All right, thank you. William Ma, Chief Investment Officer at Noah Holdings. Thank you.